Hello, I'm Ryan McGuire, partner and managing director at Oak Wealth Advisors. Thank you for joining our 2026 first quarter market performance update. U.S. stocks delivered an up and down quarter. The S&P 500 declined 4.3%, first weighed down by a drop in large cap technology stocks as investors grew cautious about AI infrastructure spending. The story beneath the surface, however, was a bit more encouraging. Small cap stocks held up better, with the Russell 2000 eking out a modest gain of 0.9%, and the average S&P 500 stock outperforming the broad index by nearly 5%. Value stocks beat growth stocks decisively. The defining event of the quarter, of course, was the escalation of the conflict in Iran, which rattled markets in March, rekindled inflation concerns, and caused investors to reduce expectations for Federal Reserve cuts in 2026. Despite the turbulence, corporate earnings remained healthy, with S&P 500 companies on track to deliver their sixth consecutive quarter of earnings growth. International stock markets finished modestly down on the quarter after a rough March, but still up over 23% on a one-year basis. On the bond side, rising yields made for a difficult quarter. The Bloomberg US Aggregate Bond Index finished essentially flat, a step down from the four prior quarters, each of which had delivered positive returns. The 10-year Treasury yield ended quarter one near 4.3%, its highest level since mid-25. As always, if you'd like to discuss how these developments connect to your personal financial plan, please don't hesitate to reach out to your team member at Oak Wealth Advisors. Thank you for joining us, and we wish you a prosperous rest of spring and beginning of summer. Thank you.